Hey everybody, this is Jim at SP500chart.com. It's 4:10 on 10/2, 2013. That's October 2nd, 2013. We're going to take a look at the chart after I remind you that the website and the video are for educational purposes only, and nothing stated at the side or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Okay, one of the first things I want to say is, and I'm going to probably put a little flashing thing right here where my mouse is. I'm going to be uploading a new chart to the chart room, and I want to give you a heads up on that. I've got a chart that looks pretty nice long term, looks like a potential bullish pattern forming. So go to the chart room and look for that. And if you are not a subscriber, $19.95 a month, and you are good to go. And if nothing else, you get to hear me every now and then try to read the disclaimer in one breath, alone worth the price of admission. So we were looking at this mustard colored channel. Okay, here it is. And we broke down into what was defined rather late, to be honest with you, but I think on Monday we changed this from a descending wedge to a channel, but the same thing, and that is look for a breakout above this top line. If this top line gets taken out, then the markets should start to make a new leg up, because that's the pattern we've seen for years. So yesterday we got that upward move over that red line, and yesterday after the market closed, I said, you know, what we know about technical analysis isn't always what exactly the direction the market is going to take at any given point in time. What we get a feel for, however, is where what used to be a resistance line turns into support. And that's what I think we saw today. So we ended up with some weakness, and we got down and tagged this top line, and I went with another SPY position within probably 30 cents of the day's low, if you will. If you know what I mean. I got real close to that low down there. My SPY position, I'll tell you, I believe. Hold on, let me just go find out, and I'll tell you. Excuse me. 167.92 was where I got into SPY, which is right down, very, very near that low, within a short period after the open. Now, we bounced off that nicely. Then we encountered a little selling around midday, a little bit after lunch, and then started to rally back up. So what this kind of looks to me like is that, where's my drawing tools? It looks as if this may be serving as a very, very small little flag on the chart. At least that's the way it looks right now. And it is also possible, in addition to that little flag there, it's also possible that we actually have a small inverted head and shoulders to consider. Now, you may be looking at this and say, yeah, but Jim, duh, you big dummy, don't you see the possible continuation head and shoulders here? Yeah, I see that. And I've got this line drawn there just in case that were to be the case. And I've also got my SPY position protected with a fairly tight stop. So if we break through this and we start to head down, I'm not going to lose much, and I'm probably not going to gain that much on this either, because I don't think there's a tremendous amount of upside. But if we get into another channel situation, then it would certainly be nice to be able to ride that position on up for a bit. Right now, I don't think there's enough information on this chart to get any idea for where a channel may exist. I can tell you that as we look back and we examine some of our prior channels, they have a pretty aggressive slant to them. This one right here, this one right here, this one right here. So it would not surprise me if in the final analysis we end up with something perhaps that would follow this kind of line upwards. That's certainly within the realm of possibility, but we don't know that yet. So I think it's dangerous to put that line down there just in case the market says, no, this time we're going to do it a little differently. So we may be better served by just leaving that alone for right now. So I will erase that. And again, as we zoom in, we see this red channel, the breakout yesterday, the very nice pullback today. Certainly that's worth playing. And guys, I think that's about it. I would just say, we've got a potential for some resistance coming up. I want to show you where that is, and then I think that'll be really about all we need to do. And the potential for resistance, as I see it right now, is right around 1702, 1700 there. But let's just call it 1700. Let's see if the S&P can mount the strength to get up over that. And if it can, then I think we're good to go to at least the mid 1720s. And if we can get over this line, guys, this market can go on up to, well, we'll cross that bridge if and when we get there. But for right now, the important thing is it appears that our 8-day skid is over. And even though the market's closed down a fraction today, I do not take that as anything other than, well, let me put it this way. Even though the market's closed down today, what took place today, in my book, looks bullish. So guys, thanks for watching. Make sure you check out the chart room for the new chart. And hey, I can't say it enough. Thank you for your very, very kind support.